Hey, what's up? Welcome to DGenEd. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts and going over data. And so this is pre-market prep for Thursday, February 13th, and we are going to dive into the usual charts, which include the volatility index, the S&P 500, Bitcoin, and uranium. And then I'm going to go over a few that have stood out to me as being real winners in the past and potential winners continuing into the future. And those include Intel, learned some good lessons from this, also Hycroft Mining, as well as Unity Software. I think that this one, is at a very nice level, so wanted to look at some of the data with that. But, as always, let's first dive into the UVIX, which is the 2x long VIX futures ETF, which closed yesterday at a price of $28.29, being down about 0.75%, but bouncing about 30 cents in the pre-market. So let's dive into the chart over here. And so, yeah, we can see that, while yesterday was only down 0.75%, we have this pretty massive red candle. And that is because we opened much higher kind of on the CPI data, and that ended up being kind of a nothing burger, and we sold off here and actually put in a bearish engulfing candle with high volume. And so that would make me think that we're going to have, I would say, a tough time getting above 30, because there was so much selling pressure met when we got that high. And then so if we do switch over to the 10-minute time frame, actually, well, before I do that, we can see there was a wick yesterday going up to $30.09, so piercing the orange line here before coming lower. And so I am wondering if we are going to be coming down to not only test this blue line, which was a gap that has been filled, but actually break through it, coming down to around $27, if not lower. So now let's switch over to the 10-minute time frame to look at what happened with the price yesterday. And so we can see that, yeah, like right at the start market open, we hit around 30.09, and then pulled down, finding a little bit of support around these moving averages, ultimately breaking below the majority of them before the end of the day. And now it does look like we are up a little bit, but again, I do think that this line down here at 27.42 will likely be tested, and I imagine broken through, so good to be patient for that, which is what I'm planning to do. And then we can also look over at the VIX. This is the market volatility index. This is only options, does not include pre-market or after hours trading. That's why I like to look at the UVIX. And so we can see here that the VIX closed yesterday at a price of $15.89, being down 0.81% on the day. And if we look at the chart here, let's see at the 10-minute time frame. Let's see, I believe, yeah, this would have been the first candle of the day, a green candle, because there's no pre-market trading, so it went up, it gapped up. Actually, wait, no, it didn't gap up. It came from here and then moved up, and then started to fade lower. And I did draw this kind of casual trend line here, and if I do let's see, extend that over, trying to keep that same slope, it does look like we are trading below it now, having tested it multiple times over here, going back to really the pivot low from the 10-minute chart, but here looking at February 7th, we did get this nice move up on that day after testing the blue line here, which is a gap that has been filled, and that is at 1485. Bounced from there, and then following the kind of move up, tested this level here, and then that's how I've got that trend line drawn, and we are currently getting rejected from it. Or, I should say we are below it, so we might be, I suspect, going down to around 1485. But then if we do switch over to the daily time frame, yeah, we can see this kind of, triangle falling wedge. Well, I would not necessarily say it's a falling wedge because it was following this down move, so perhaps this is a bear flag. But we did get kind of a fake out break above it yesterday, but then continued to reside, opens and closes within this triangle, which makes me think that this could be breaking down since we got a rejection to the upside. I might actually make these lines notably thicker, and and then we can revisit those tomorrow, which will have to be non-live because I got work tomorrow. But yeah, there's that chart, and I think I go over this every day, that this could be coming down to 1270, if not 1062. So those are some levels that I'm keeping my eyes on, but really not trading the VIX, looking to pick up some UVIX at 27 and or lower. But then if we switch over to the SPY, this is an S&P 500 tracking ETF, and it did close yesterday at a price of 603.36, being down about 1/3% on the day and more or less being flat in the pre-market. And so what we have over here, I might just also make this line a little bit thicker like I did with the VIX. We can see this trend line has been acting as some pretty notable resistance. I've been wondering if we might be breaking above, maybe getting up to 608 before getting rejected, testing that downtrend as support before putting in new highs. And it looks like, we're still trading below that downtrend, struggling to get above it. So we will have to see if we are able to break above. And hey, is it Risto? What's up? How's it going? Good morning. Happy Thursday. And so, yeah, here I'm just going to switch over to the, 10-minute time frame. And we can see that during the pre-market, we did test 602, which was a gap that has been filled. And yesterday, during the day, came down to, looks like during market hours, we got a low, yes, below $600 before bouncing up, kind of getting rejected from that thick white downtrend. And so we'll have to see if we break below 602, get into the 600s. And I do think that the markets will continue higher, though, so I'm not expecting this to go lower. I'm expecting the VIX and UVIX to go lower. And then switching over to the SPX, this is, I just think, a better tracking ETF of the S&P 500. And so we can see here, no pre-market or after hours trading of this, but we can see this very nice gap down here going from the 11th to the 12th. And so that gap was, let's see, it's still, it has not yet been filled. So maybe what I want to do, actually, I'll just do that on the daily chart, do a line there that would suggest, the gap needs to be filled to the upside. But yeah, got a bounce from $6,003 exactly, no change there. Bounce from there, getting above $6,040.53, this blue line, which was a gap that has been filled, and now trading above that. So I'm wondering if we will get above this downtrend, which I'm going to make a little thicker. And I should note that the SPX did close yesterday at $6,051.97, being down about 1/4%, so a little bit less than the SPY. And so we could see that downtrend, but I'm just going to switch this over to the daily so we can look at that being getting rejected from it. And also, the wick low from it yesterday, that was at a price of $6,004.84. And that corresponds very nicely with the yellow number over here. Believe it or not, I think that's I'm reading the wrong number. I was reading the 50-day moving average. The low from yesterday was $6,003. I did mention that, I think, on the 10-minute time frame. But yeah, that came down very nicely, pierced the 50-day moving average, got a bounce, and it does look like we have a gap here based on the close from Tuesday, which was at a price of $6,068.50. So I do have that level marked just right there. And yeah, so I'm just going to make that a dashed line, make it blue because it's a gap that has yet to be filled. And so I might actually do the same thing with the SPY just so these charts are consistent. The closing price from Tuesday over here was $605.31. Got that marked right. And that is now a blue dashed line. So we know there's a gap there that needs to get filled. Might get filled today. I wouldn't be surprised if that happens. And so, yeah, but I mean, if this does bleed lower, whether that's the SPX or the SPY, we do have this yellow downtrend based on the highs from, let's see, December 6th over here, and just making sure that's the exact same date. Wouldn't be surprised if it was different. But yeah, December 6th coming down here, got a very nice retest of that downtrend on February 3rd before bouncing and going up about 3% there. So for a lot of stocks, not terribly exciting. For the SPX, that's a pretty good move. All right, but now let's switch over to Bitcoin, which, got a pretty nice dip yesterday. It looks like it came down to a low of just above $94,000, currently trading at around 95,700 or so, and some change there, being just below $96,000. And it does look like at this point, making all these lines a little bit thicker, we have been, struggling to get above this downtrend. Did have a couple days trading above it, really, 3 days trading above it before kind of breaking lower, going up and down, waxing and waning around that level. And now we are currently trading right around there. And so, I am wondering if we are going to be breaking back to this 786. That would be around $93,500, but I don't think that an order would get filled at that price. I think that would be a fill around 94,000. And so I'm looking to dip buy if it does go down to there. But like we've seen with this red line, we've seen higher lows forming, and the kind of panic dip around the CPI data yesterday did in fact, indeed put in a higher low again. And we could actually probably adjust this red line to be intersecting over here with the close from the second, which is going to be a little bit off just because the daily candles over here in Webull are not GMT or UTC, however you want to phrase that time zone. Yeah, we would still be putting in higher lows corresponding with that. And so, I think that we are probably going to be seeing above 100,000. And from what I understand, there's a good amount of stop losses up here for short positions. So they might get liquidated on a move up to around, 102 to maybe $106,000, and then maybe we would get moves down to the 80s or the 70s. But I feel like we're just forming a big longer-term bull flag here, and that we will be going higher. So I am just kind of casually stacking here, but with also dip buy limit orders placed at 94, going down to, I believe, 91,000. In $1,000 increments, just $10 limit buys. So nothing too crazy there, but kind of wondering if we will be testing this purple line here again at around $92,600, or fill of 93, maybe coming down to the low that we hit on the 13th, which was sub 90,000. So maybe I actually want to start considering placing some limit buys down around there. But yeah, just taking it easy, taking it slow. And, I do a daily $5 DCA, not only with Bitcoin, also with Doge and Ethereum. Bitcoin dip buy is placed for 9 a.m. Eastern if you're curious. And then Doge and Ethereum, those dip buys are placed with Robinhood, which gets filled around 6 p.m. Eastern. But anyways, let's flip over to URA. This is the Global X Uranium ETF, which closed yesterday just below $29 a share, being up a little over 1% on the day, so getting a pretty nice bounce there. And during pre-market, it does look like it is about 26 cents higher than this, above 29 cents. And so, yeah, very nice green move on the day. And let's actually move this channel over so that should continue into tomorrow's trading, today's trading as well. And actually, so maybe I want to extend that even more. But yeah, looking at this, I am very curious to see if we will get a breakdown because following this gap down, we did see a pretty massive red candle, and all of this consolidation here just kind of makes me think that this is a bear flag, or that this is, kind of a more than falling three methods that would ultimately end up coming down to around 25, if not 24.50. It could probably sound like a broken record talking about it like that, and I might actually switch over to the weekly time frame to see. Yeah, I was curious if there's something over here, but yeah, even on the weekly, down move and consolidation, but you could also think of this as, up move and consolidation. So maybe this is a bull flag, and I am being too stubborn wanting this to come down. But, just kind of keeping an eye on it out of curiosity. So no pressure, no stress there. And, I do see, let's see, this level at 28.06. I'm not really sure why I have that level drawn there, because the closing price here on February 3rd was actually at 27.99. So I'm going to adjust that to that closing price, lock that in place, and that is actually a gap that has not yet been filled. So let's style that appropriately. And yeah, I do have this kind of higher lows formed here. We have still been respecting that. We have had some wicks below it. But that does still look to be like we are forming higher lows. So we'll see if that continues to hold, and if we are to fill this gap up here around 30.53, or if we are to come down to 24.50 or 25 first. But then just looking at the 10-minute time frame over here, we can see a very nice bounce from that white uptrend that I just fudged to get on there. And yeah, so that's the higher low. So it's not fudging. That's just, marking the chart. And we are currently trading, it looks like, around 29.20. So right around here where the cursor is. And so we'll have to see where we open up. But yeah, I am leaning towards this going down and finding some pretty notable support down here. And so I think that is the time to enter before potentially getting up to the downtrend up here, which would be, over 20% move. Whereas if you are buying right around now, that would only be a 5 to, maybe 10% if you bought on a little bit of a dip. But, I am going to be patient to add down here. But yeah, I'm just going to go over now some other charts that do stand out to me, and really just kind of getting into the options data. And so the first one that I wanted to go over is the Intel chart. This is one that I had been accumulating some calls, and actually because I recognize, wow, the chart looks really good, I accumulated some shares as well. Don't have a huge position, wish I had more shares, but I had to work with the cash that I had on the side at the time. Yeah, and so I did make some mistakes with trading this as far as calls go. I took profits at 20% on a June dated contract that expires in June. And I could have held that for a 40%, 60%. And I suspect that will continue to go higher. But some of the data from Unusual Whales was making me think that, the bulls are taking some profits. Which I think is actually a leading indicator because that is to suggest that we will soon form a top, but we have not done that just yet. And so, if we were to form a top, I think that could be around 23.32 or maybe up here at the 200-day moving average at around 24.73. And so if we do get up to any of those levels, I think that we could be seeing, following that, again, a retracement to maybe around $20. Or let's see, maybe I add the 618 to this, maybe coming down to around 21 or so. But, that hasn't happened yet. This move is not over. And I think it is good to, for me with options, I've been needing to get better at, taking profits on those as they move higher, not holding them too long. And so I did do that. I did execute based on my plan. But I do think that, this is probably going to continue higher because these candles just look so strong going up versus these here, kind of showing a topping signal there. And let's see, the volume when we were getting up here was at a maximum of 166 million and 0.48. And 166.48 million. And the volume yesterday was 162.63, so a little bit lower. But we do have, this green candle. It is kind of a hammer candle, though, so maybe that suggests that this might be rolling over. But the MACD here just flipped green, looking good. So I think that this is probably going to at least 23.30. And so, yeah, I wanted to go over some of the options data with this to kind of share what I have been learning. And so this contract, this is the $30 call that expires in June. What I have been doing with options, I have effectively been getting established in positions a little too early, and then I end up taking profits too early. And so I took profits on this one at 60, which we did see some trading yesterday. Let's see. This is the 13th here, so at the very bottom we have the 12th, and that is a low of 53 cents. And I actually had a buy order at 50 cents to grab one of those shares. One of those contracts, but it didn't get filled because the low is only 53 cents. But then it went up to a high of 80 cents. So I sold at 60, which was a 20% swing for me from 50 cents up to 60, which is great. That was my plan. That was my strategy. But I could have swung for a 40 or 60%, or, could have done 40, 50, 60. And so, it's a little bit unfortunate, but this is, me learning about these signals that we're seeing here. And also, before I make this go away, Unusual Whales, it looks like they do currently have a Valentine's Day sale until February 17th. Get 20% off option flow upgrades. And so I have the annual package. I find it to be a great tool, and hopefully the way that I share it shows some of the utility of that. And I might actually just leave that up there just because, why not? I think it's a great platform. And so anyways, I'm just going to expand the data over here so we can look at the Intel overview. And so what I had actually posted this on X yesterday during the day. What do we see here? We see net put premium in red being more or less flat, coming down by about $660, almost $1,000 there. So effectively being flat relative to the net call premium, which dropped, coming down here by, almost a little bit over $11 million on the day. So that suggests that, there is some selling. And if we do look at the bear bull slider here, more on the bearish side. So that got me thinking, the top is probably in and or near, so I should probably take some more profits. I still have one of these contracts. This is the $50 call that expires in January. I forget what my average is. I think 29 cents. And, I did trim one yesterday, but I plan on holding my last remaining one. Because I don't think the top is in just yet. But I do think that we're getting near, which is why we're seeing, the selling of these calls. And then if I switch this over to, I believe, the past 3 days, we can see that, there's been a lot of buying of calls. So here on, Monday, we saw net call premium going up by nearly 11 million. And then on Tuesday, we saw it go up by almost 19 million. And then we see kind of this big change over here, the net call premium going negative. And so, I was thinking, well, the top is probably getting in and or near, but I still think that, looking at the chart, we could be going up to, I think, 23.50, let's say. Maybe, like I said, 24.50, but I think that it's probably going to lose steam before getting up there. I could be wrong, though. And so, with that being said, I think that this data from Unusual Whales is a great leading indicator, not lagging or not indicator of what's going on exactly right now with the price. Because, over here on Monday, this is where I took my 20% profit on that $30 strike call that expires in June. I could have made more money, with this going up over here. But I didn't. I'm just managing risk. I'm still holding some, though, some shares and one contract still. And so I look forward to adding to my contract if it does go back down, and especially adding to my shares if it does go back down. But I don't necessarily think that is happening just yet. So I just think this is a really nice example. Even if we go back, 30 days, we can see this even more so, more clearly. Big moves up in that net call premium, but now it's changed a little bit. So I think that we could be seeing something going on, like, actually, what I might do is I'm going to do Fibonacci retracement up to here. And so, I think that what we could be seeing is something like this before then going up. So I do think that we will have some nice dip buying opportunities soon. I do think that we will get rejected and then, have some nice dip buying opportunities, but maybe it doesn't come down to 2050. I think I'm a little conservative with these just because, I'm still learning options and stuff. But, I just like this a lot. I like Intel, and the shares that I hold are, I'm thinking about them as, I'm never going to sell them because I think that this could just be getting up to, around 50 a share, and then that's more than a 2x for me. My average, I think, is 1930. But anyways, just very excited about this, but also very curious if it's going to be putting in a top. Okay, and then so another one I had mentioned, Hycroft. I kind of drew something like this on Hycroft, and I ended up being wrong about it. But I just wanted to go over this because, it's effectively gone up to the strike that I had for, I believe, May calls. $3 hit a high yesterday of $2.96. You can see it on the chart there as well as over here. And went up over 12% on the day. I was expecting it to pull back. Clearly wrong about that. And in the pre-market, trading right around $2.99. And so, the reason why I had some calls, I got out effectively at break even. I think I made $13. I could have made $200, something like that, more than that, probably $300 if I would have held. But I just don't really like the options data, and I'm, in AMC and just don't want to be spread too thin with kind of these, speculative meme stocks. And also AMC's invested in Hycroft. So, if Hycroft's doing well, I would think that AMC would also be doing well. And, we're kind of seeing that right now. But anyways, with the Hycroft chart, I kind of wanted to get into the data. I've seen, some people posting about being bullish on this, which kind of makes me think, a top might be in. And, yeah, there are some things that we can kind of look at to assess this. Although, this is a massive green candle, so I think that it's probably more likely to continue higher than break lower, but maybe it would then be finding this trend line as support. I just don't like the options on it. And the reason for that is because if we look at them, they're only in 5-cent increments. I really don't like that. And so I'm just going to go over here to the May call. It was a $3 strike. Yeah, I sold that at, 40 cents. And it looks like the current sell is around 50 cents. So I could have made, I think I had 1600 16 contracts. And so I could have made, 160 more dollars with that. But let's look over at the options data. I think this actually might be getting ready to turn around. I think I have it in maybe bookmarks. Hycroft, no. Maybe under TRL, no. So I don't really track it over here. I'm just gonna let's see. I'll just search over here. I don't want to add it to this list because these are ones that I follow, and I don't want to trade it because of that 5-cent thing. So I'll just put it on TRL, ticker request live. And so let's look at Hycroft mining. And, to be honest, I'm kind of intrigued by, but I don't want to be trading it because of that 5-cent thing. I'm kind of intrigued by a pullback to, around 250. I think that could be happening, and with it getting above here, that seems, yeah. So let's see. I am curious to look at May's too soon. To be honest, I like the, man, there aren't any January expirations. So, the latest expiration that I can look at is going to be August. And so let's look at calls. And, at this point, I think I'm probably more interested in this going up to 4 at this point than going down to 3. So let's look at that contract. So I'll add it to the list over here. I also want to, look at a put, and that would be for $2.50, which is not an option. So again, I don't really like the limited number of options here. And then I also want to look at the expiration of May, the call for the $3 strike. That's the one that I was holding, but I GTFO'd just because I didn't like the 5-cent increments. And so anyways, looking at this one, the one that I held did have some sells at a high average fill. Looks like at 59 cents, so would not have gotten a fill at 60, but I would have, gotten a fill at 55, and so I could have exited not at 40 cents, which I did, looks like over here. I could have exited at 55 cents. That would have meant, making more than $200 on it. But, it is what it is. It's fine. I'm not hung up about it. And then let's see. The $4 call, I don't think this is going to continue higher. And we'll look at some of the data over here that would suggest that. I'm just going to put that on the day so it's not too much information over there. But yeah, and then I am, curious about the $2 put, but there's not much traded on that. So, yeah, but that was for August. And so let's just expand the data here so we can look at it. And yeah, people, posting, being, bullish on Hycroft. If we actually look at the data here, it's more on the bearish side, 62%, so pretty notable there. But let's just look at this, try to understand it. As the stock price is going up in yellow, we see the net put premium in red being more or less flat, but then going up, closing positive on the day. and then the net call premium being a little bit positive, a little bit negative, and then kind of selling off massively towards the end of the day. And so we can see, looking at the numbers, net put premium went up by almost $800, so a very small amount, so nothing too crazy there. And the net call premium came down by nearly $4,000. Again, not a lot of money, but it is, net bearish. So good to be considering that. If we do look over the past, I'm going to do 7 days, we can see that, nothing too notable until Tuesday. See this large amount of volume and net call premium launching up, going to, $12,000. So that is notable for the data here. But that's really just, like one YOLO as far as, $10,000 goes. So that's not, a huge thing there. But then price did go up higher following that. And then the calls have been selling off. So at this point, I think it's good to be cautious. And if we do look at the past 30 days, we can see that, we have seen kind of a pretty big shift here, net call premium going up, but then coming back down. So I do think that what we could be seeing is a rejection around 3, and then kind of like how I had it drawn before, I think that we could be seeing a little bit of a rollover before potentially going higher. So that is what I am looking for, but I am not trading Hycroft mining because it's just too speculative, and I'm already in AMC, so I'm just not trying to spread myself too thin. But yeah, and I did want to point out a reason why, I think that this could be getting rejected here. If we do look at the volume, let's see, corresponding with the high over here, volume was, around 635,000. Now 634,000, let's round it down actually. And then over here, we see it at 484,000. We'll round that up. So it's lower, but we're getting back to these highs. Now we do see volume being massively higher up here. And so, I do think that we will be seeing a little bit of a cool off and a retest of right around 260, I think is likely. But again, I just think this is too speculative of a stock to be trading. So I have not been in it, but I also, might clean up these levels to the downside because I don't think they're going to be notable anymore. But, something that's kind of interesting, we do have this downtrend over here. So maybe I want to, just draw this based on kind of the highs over here. So wicks going above it, getting a retest of that level over, a test and rejection of that level over here, not a retest. What we would be looking for, what we would want to be seeing is a retest. So coming down to that downtrend, but I could, actually, maybe I don't want to do that as a, no, it's just going to be casual. It's going to be casual. But I could, move this a little bit. I could move it, a lot to over there. And, but I just don't think that's, just being kind of casual. Maybe move it to over here. And then, I think that looks kind of nice. We did get a breakout, and then maybe I can move that a little bit higher. And so, what we were seeing over here when I was thinking that this might be pulling back, that would, be for a retest of this. And so maybe, I should have left that drawing up there. But anyways, enough rambling about Hycroft. I do hope that is helpful for you guys. And then before I switch over to Unity, I'm just going to have another sip of coffee before it gets cold. All right. And let's see, Unity software. This one came down to my level. I'm curious to look at the options data, though. I don't think it is, showing bullish signs just yet. But I just kind of wanted to go over how we had this neckline here. I'm going to actually make that line thicker, just because it was a notable level. Neckline for this inverse head and shoulders. Got this nice move to the upside, and I can actually remove the 786 from there because that is not necessary. And so I've got that done. I'm just going to make sure that that should be the low of 1390 and then the high from over here, which was 2340. And so I'm going to lock that into place, make sure 2340. Yep, so that's good. I'm just going to make this thicker so it stands out, make it light blue. That was an important level. And then also, we have this uptrend, which I drew kind of casually. And so I might actually fine tune that. It's a trend line, but I want to draw that as a ray, get it right to the point. So 1390 there, and then whatever the low was over here. And so make sure that is 1390, and then the low from which day? Let's see. So I'm going to move this just over here to 1790. I think I need to. Oops. I want to pivot it. I don't think that's correct. So 1729, and yeah, that does look like it's still over there. So I'm going to lock that into place. Just make sure the numbers are right. And I'm just going to delete that 3, make it a 0, and actually just make sure that's, yes, correct still. And make that line notably thicker. And yeah, I think it's fine being white. And so, when we had came back to that level over here, that corresponded with the 618, or really the golden pocket here around 1750. And we got a very nice bounce there that also corresponded with a retest of this trend line here. And so now what we see, this is locked into place. Also going to, I don't know how thick I want to make that. I'll make it pretty thick. Actually, no, I don't need to make it that thick. That's fine right there. Maybe I'll make it yellow though. So that stands out. And we also do have this gap here at 1973. That gap has been filled though. So I'm going to make that line solid. And, do have this alert here at 20. In the pre-market, we are up above 20. Closed yesterday at 1944. And I think that this is a dip buying opportunity. Maybe we're going to get some tweets from Warren Kitty that are suggestive of Unity Software, or maybe that's just coincidence and it's only GameStop. Who knows? But Unity Software does do stuff with games. So, I think that there's a potential there. There's this headline from TipRanks. Unity Software continues its losing streak as layoffs slam use stock today. And so, I think that kind of headline is maybe it's a dip buying level. We do have the 786 here, just going all over the place here at 1973. I think I mentioned that. There's also this gap here at 1980. Tons of levels were below them, and I think that this is kind of a fake out dip buying opportunity. And that this is going to be going higher. And so let's look at some of the options data with Unity Software. And I'm actually going to pull up my options theses because I have and have been accumulating some of these. One of them is the $42 strike call that expires in June. This one's a little bit more risky. This is one that I've been accumulating, and let's see, my average is higher than the current price. I'm thinking, I want to add to my position on this one today. I think I had a limit buy order at 20 cents, but I think I might want to up it to 20. I have 10 of these contracts with an average price of 63 cents, so I could most definitely be getting this down, with the high yesterday being 25 cents, the low being 22. On Tuesday, the 11th, the lowest 20 cents. So yeah, I just think that this is like getting into dip buying territory based on the chart, but let's look at the options data here in just a second. The other contract that I've been following is the $65 call. This one expires in January, I've gone over in videos on Unity software why I think it could be heading up to, I believe, 75, which is going to be, if I do flip over to the chart, based on this, neckline up here, that being the level around 45, that would be the neckline, and then a measured move would bring it from, 13, 14 up to 45, and then a measured move that's around 30. So add 30 to from around 15 to around 45, that's a change of around 30. And so adding 30 to around 45 would put it at around 75. So that's why I've been looking at this $65 call. And I actually do have some of these. I think I just have one. My average, dang, is $1. I just have one contract, but this one, the lows in the 20s, 30 cents. So, this is one I gotta consider adding to. But I want to do that based on data. I don't want to jump the gun. I want to be informed about this trading. And so what we can see here, also earning expected on the 20th, so during the pre-market. So maybe that's something to be aware of. But what we can see here is price in yellow yesterday on the 12th was more or less flat. We do have a net put premium going up a little bit over here, but then net going down over the course of the day. We do have net call premium being negative for the most part for the duration of yesterday, but being less negative than the net put premium. And so looking at the data over here, net put premium came down by $200,000, whereas net call premium came down by only about $30,000. And so that is, net bullish. Looking at the bear bull slider, 45% on the bullish side. There's more selling of puts than calls. That means that there is, the bottom potentially being formed. Not necessarily that it's going to start taking off, but this is, bottom signs. So let's look at just, the past 3 trading days. So this is going to be Monday, Tuesday, and Wednesday. And so what we can see in this is, net call premium coming down on Monday by over $840,000. So that's getting close to $1 million. That's kind of bearish. But then over here on Tuesday, net call premium coming down by only $461,000, whereas net put premium came down a lot more versus on Monday, and that came down. Net put premium came down by nearly $80,000. So we have net call premium coming down here. That looks bearish. Then we have it coming down less. That looks less bearish on top of more net put premium coming down. So that is maybe suggesting a bottom's coming in. And then we do see, net put premium being more negative than net call premium. So these are potential bottoming signals. And if we look at the past 30 days, just to show all of the data, we do have, stock price going up here, coming down, being sideways, effectively a bear flag, and then coming down more. And we do have this big wick coming down. Well, it looks like a wick, but this is the net put premium coming down $2 million on January 16th. And so that is potential that a bottom is being formed, but not just yet. Looking at the chart, we are at this technical level, a fake outbreak below it, earnings coming up. I think that this could be heading to around $33, if not higher. And that $33 is based on a Fibonacci extension that I have drawn over here. So I think that looks just great. And I wanted to cover this during pre-market prep because I want to add to those call positions that I have. And for me, I do have some shares. Maybe I would add to that. But I am really excited about the $42 strike for June. That corresponds with getting back up to this neckline here. And so by June, could that happen? Let's see. Let's draw a little bit of a doodle here. Could this happen by June? I think that could happen. by June 20th. Actually, based on my doodle, that looks like it would be hitting that level on July 4th. And on that day, the market is closed. So good to take that, with a grain of salt. But that is just what I'm seeing there. And I'm going to make that a light blue, a very soothing line. I think that this could be happening. And if it only gets up to 33, this contract would probably be printing, so I feel good about that. 65, I think I'm probably getting a little bit ahead of myself, because if we were to get up to here to form that inverse head and shoulders pattern, we would then have to, from here, pull back, maybe coming down to around here, and that would then be getting into January of next year. And so I might actually make that line a little bit, thicker and make it actually red, because I don't think that by January of next year we will be going up to 65, but I think that by January of next year we could be completing this inverse head and shoulders pattern that would then result in a measured move of, let's see, if I do take it from the bottom here up to that neckline, that would result in a move up to around $75 a share. So I feel really good about Unity Software long term. And in the intermediate term, in the immediate term with earnings coming up, I think that what we are seeing is an excellent dip buying opportunity, testing this trend line again, but faking out breaking below it, making people panic a little bit before we start to see this move higher. So yeah, I am really excited about Unity Software. And so, I just wanted to share that with you guys. But, as always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thanks a lot for watching, and take care, you guys. And, on that note, I'm probably going to make a clip of Unity Software because I am stoked about it. But, I'm probably just going to end the stream there unless there are some requests, or maybe I want to look over, see what's going on with Twitter. You can see this is how I made my thumbnail. Let's see some notifications. So, we do have one from Il Capo of Crypto, and this is something that he posted on the 11th, and then he reposted it again. And he is saying, based on the current situation and recent technical analysis, I see another potential 20 to 40% drop for altcoins from current prices before an important local bottom is reached. And so he is ready to buy the dip if it happens. And if it does not happen, I personally am, just stacking it and chilling, no big deal. And then Gareth Soloway here is posting that Meta Platforms is up for 18 straight days. One of his highest conviction shorts over the next few days for a quick trade. Whether today, Friday, or Monday, the pullback will come, even if it's just money rotation, profit taking. And so let's actually look over at the Meta chart, go with some information that we're getting from X there. And looking at Meta Platforms, what do I see with this? I'm just going to delete all of my drawings because I don't think that they are too relevant. And so, this could potentially be coming down to, around $669. So, like, part of that number, but being around 666. Lots of sixes there. I'm a little bit nervous. I think that, this has been trading well above all of these, moving averages for quite some time. And let's see. Even if this just came down to, the moving average here, that would be a downside move of around 8%. Maybe we could look at some, let's look at some options data with this. So going over here to contract lookup, I'm going to do TRL, and man, where was I looking at? I thought I had added Hycroft over here, but I guess, yep, I did add, Hycroft. Yep, I did add. Okay, so let's add Apple, AAPL. look at some of the data there. And so I would say that this could be coming down to around $670. And yeah, when do I think that could be happening? I don't know. But let's look at some puts for, let's say, April. Let's say April, giving us some time. Or maybe I don't want to do April. Maybe that's too soon. Maybe I want to do June. Well, let's see. Let's look at March. That is, I think this is the, is this the monthly? I think the 21st is the monthly contracts. So yeah, let's do that one and do a put and do, let's see, 270 is what I was saying. So let's see, right around there. So I'll add that. And then also I'm going to expand this out to June. And then we'll add that as well. Just kind of curiosity looking at these. But let's just expand the data over here. It does look like it is still bullish, 52% there. And we can see that, stock price went up yesterday. Net put premium went down, so that's bullish. Net call premium went up, that's bullish. And if we look at the data, net put premium came down by $6.68 million, whereas net call premium went up by over $20 million. So those are big numbers, but this is Apple. This is a big time player. And so let's look over the past 30 days and see how this has potentially changed. And so what we see here, maybe this is significant, maybe it's not. We see lower highs formed in the net call premium. Maybe that's significant, maybe it's not. But over here, we saw net call premium up 40 million on January 14th, and then up net call premium up 26.44 million on the 27th of January. And then now up 20 million. So this is still, in all honesty, still looking bullish. I don't think the top is in just yet. But yeah, like Gareth's saying, maybe this could be in soon. And so let's look up this data for March. It looks like this is not a very popular contract being traded, and it costs, over $3,000 to buy one of them. It's too pricey for me. Going out into June, that's again going to be over $3,000. So yeah, I'm not looking to do anything with Apple. It's just too pricey for me. But it's 8 my time, 9 Eastern, so I'm going to throw this up here. Thank you so much for watching. As always, those are just my thoughts. If you did find them helpful, make sure you subscribe to the channel, like the video, and tune in for pre-market preps, which I'm going to be trying to do every day before market opens, whether they're live or recorded before I head to work. Should be a lot of good info in them, and I will put out a clip on Unity and possibly Hycroft mining later today. So